Gold versus Bitcoin. Which is the ultimate store of value? That is the question we're answering in today's video. As always, before we dive into today's topic, I would be super grateful if you could drop a like below. Give us a subscribe if you are not subscribed already, and hit the bell notification to stay up to date with all of the latest crypto insights and to hit your crypto goals. So, gold versus Bitcoin. What is the best store of value? Well, obviously, throughout history and throughout the past number of centuries, gold has acted as a very reliable and trustworthy store of value for people to hold and transfer and maintain their wealth over time. And a lot of the characteristics of gold are also applicable to Bitcoin. And I think Bitcoin lends a lot of its better characteristics from what makes gold so unique and what makes gold so valuable in the first place. Bitcoin lends a lot from gold and what it has served as over the past number of centuries. So right off the bat, it's worth mentioning that, and it's worth thinking about the way in which Bitcoin is structured and the characteristics of Bitcoin versus gold. So starting out, we can compare Bitcoin versus gold in terms of a number of these different characteristics. Obviously, in terms of scarcity, Bitcoin has a fixed supply and gold is extremely scarce. Inherently, that's what gives and has given gold its value over the years. In terms of durability, gold is obviously a hardware while Bitcoin is a software. In terms of portability, Bitcoin can be sent anywhere in the world via an internet connection, whereas gold is about 25 pounds per bar. Obviously, it is portable, but a little bit more difficult to do so. In terms of divisibility, Bitcoin is almost infinitely divisible in terms of breaking it down into an individual Satoshi, which is 1/1,000,000th of a Bitcoin. Gold is based on the ounces system and can be divisible in terms of ounces. Storage, Bitcoin uses a digital wallet. Gold, you typically need a safe or a vault to physically store your gold. Counterfeit difficulty, Bitcoin is prohibitively difficult and expensive to counterfeit and has not happened to date. It would require a 51% network attack, which we can discuss in another video. Gold is extremely difficult to counterfeit, but definitely possible if you have enough time and energy to put into it. And then in terms of adoption, these numbers are a little bit older, but the market capitalization of Bitcoin is currently about 830 billion as of January 17th, 2024 at the time of recording, while the gold market cap, I think, is almost 11 trillion at this point. So it's also worth noting that at its peak, Bitcoin had a market cap of over 1.2 trillion and has dropped back down to about 830 in the past 12 to 24 months. But an interesting comparison here in terms of adoption and market capitalization, because Bitcoin is only 15 years old while gold has been being used for centuries. And if Bitcoin can make a dent in that much of the market cap versus gold after only 15 years, it'll be extremely interesting to see how that plays out over the next 15 years and beyond. So obviously we spoke about gold and its availability already, but how much gold and how much Bitcoin has been mined over the years. So this chart is just giving us a representation of the amount of Bitcoin that's been mined since 2009, since its inception, and obviously the amount of gold that's been mined since 1870 in terms of the ramp up of gold production and gold mining over the past couple of centuries. The interesting thing to note here that we're going to talk about in a moment is the diminishing supply that will be floated onto the market in terms of Bitcoin over the coming 100 years, due to the fact that it does have a fixed supply of only 21 million Bitcoin ever, whereas gold has a yearly supply of gold that is mined and extracted from the earth, which is pretty consistent year over year. So this is what we were referring to with the Bitcoin supply over time. The block subsidy reward obviously gets halved every 4 years, and we've done different videos on the Bitcoin halvings that you can look into, but you can see this charted out over time here as we move towards the year 2040 and beyond. The current Bitcoin halving that occurred in 2020 meant that the block reward dropped to 6.25 Bitcoins per block. In 2024, later this year, in April, May, that will drop even further to 3.125 Bitcoins per block. What this means, in essence, is that every 4 years, the halving event means that the amount of supply that is coming into the system for Bitcoin is getting significantly reduced, halved, every 4 years until the year 2140, when the last Bitcoin will be mined. So, extremely interesting to think about how that plays out over time, while something like gold has more of a constant and fixed supply every year for the amount of gold that is mined. So this is where the stock to flow model comes in. And thinking about gold as the example here, gold has a total supply of 190,000 tons that have ever been mined. Okay, about 2.5 to 3,200 tons of gold are mined every single year, which means that when we divide the amount of supply of gold that's mined every year by the total supply, that gives us a stock to flow of about 59, a stock to flow ratio of about 59. Okay, now when it comes to stock to flow, the higher the number, the better. And we're going to look at a chart now in a moment to represent this, but we're seeing here the stock to flow of a couple of different physical assets like gold, silver, palladium, platinum, and we can see that the highest of these is gold with a 62 stock to flow ratio. Again, this fluctuates between kind of 58 and 63 year over year. We'll look at a chart in a moment, but the reason why gold is as valuable as it is because it takes so long to replenish the supply of gold. So what this means is if the entire supply of gold suddenly disappeared tomorrow, it would take about 59 years to completely replenish the supply of gold based on the amount of gold that is mined every single year. Okay, so we can see the annual gold stock to flow ratio fluctuating year over year, but relatively consistent in terms of the ratio year over year, kind of being in between, the upper 50s to lower 70s over the past couple of decades since the early 2000s. So when we think about the Bitcoin stock to flow, right now when we calculate it, because the Bitcoin block reward is 6.25 Bitcoin per block, and a block is mined every 10 minutes, that translates into an annual flow of about 328,500 Bitcoin. Again, when we divide that number by the total circulating supply to date, which is 19 million, we get a stock to flow ratio of 58.35. Now, obviously, as we mentioned above, this variable here of 6.2 Bitcoin per block gets halved every 4 years. So that number will be 3.125 by May of this year, which means that the stock to flow ratio is going to significantly increase. And as we see here, and as we mentioned, the stock to flow ratio, the higher the number, the better, because the longer it takes to replenish the existing supply based on the amount of flow that's coming into the market every single year. So again, it's very difficult to 100% map this out into the future, but when we think about the stock to flow of Bitcoin versus gold, we can see here how, before the 2016 halving, the stock to flow of Bitcoin was much less, probably around 10 or 11. Then it increased after the 2020 halving to what we have now of about 58.35. we can see that the gold stock to flow ratio is here, a little bit higher than Bitcoin, but after the 2024 halving, we're going to see that dramatically increase. And by the year 2035, we're going to see it skyrocket because, again, we're going to have so little Bitcoin entering circulation year over year versus the existing supply that the stock to flow ratio just goes astronomical. And again, part of the big reason why gold has been such a good store of value over the past few centuries is because it has such a robust stock to flow ratio. So, how do we think about this and zoom out and compare Bitcoin versus gold when it comes to the stock to flow ratio, and where do we want to be putting our money going forward to get the best returns? So, mapping out the Bitcoin stock to flow, this is what we were just talking about, and the kind of brown line in this chart represents the stock to flow, which obviously is increasing every 4 years with these halving events occurring. So we can see the halvings with the dotted lines, and we can see the stock to flow having that large increase every 4 years immediately after the halving event. So again, after the 2012 halving, having this dramatic increase in stock to flow, having this dramatic increase, and with the 2024 halving this year, having that dramatic increase once again. So we can see this mapped out every 4 years because we know the halving event occurs every 4 years or every 210,000 blocks with the Bitcoin network. So the price action is modeled here with this heat map, and then the colors on the map represent the amount of days until the next halving. So again, we've looked at this stock to flow model in other videos, but super interesting to see how the price correlates and maps with the stock to flow model over time as we have these halving events and as we have that supply shock with the Bitcoin network every 4 years. So if we map that out into the future, obviously it's giving us a couple of different options here in terms of where the price could go, but thinking about a 450 to 500,000 Bitcoin price by the year 2028 is very reasonable based on that. So obviously thinking about gold in terms of the price increases that we've seen over the past few decades, obviously the price of gold has been increasing since the 60s and beyond. And obviously we spoke in previous videos about the gold spot ETF in 2004 and how we've obviously seen a dramatic increase in price since the gold ETF. It'll be interesting to see how that works for Bitcoin as well. But we've seen the price go all the way up to about $2,006 per ounce as of today. But if we level the playing field and actually be as objective as possible here and map the price of gold versus US money supply, which is basically mapping the return on investment of gold against the US dollar, when we take into consideration all of the US dollars that have been put into circulation and that have been printed in recent years, we can see that the return on investment over the same time period since Bitcoin has been in existence is only about 9% of a return on investment with gold since 2009, taking into account all of the US dollars that have been put into circulation over that period of time. So, if we zoom out even further and we go back to the 70s and 80s, we can see how, it's a significant negative return on investment when we look at the year 1980 all the way up to the present day. We're talking about a significant negative ROI when it comes to your gold investment versus actual money supply and the amount of dollars that have been printed and gone into circulation. However, if we look at the price of Bitcoin over that period of its existence versus US money supply, and again, we're trying to be objective here and level the playing field, because if we really want to understand the macroeconomic situation and where we can get the best return on investment for our money, for the dollars that we earn, for the fiat currency that we earn and want to put into action for us, then we need to consider the amount of dollars that are being put into circulation and printed every year. We've looked at this in previous videos with US money supply and how much dollars have been printed even since 2020. Almost a quarter of all US dollars in circulation have been printed since 2020. And what we're seeing here is Bitcoin versus US monetary supply. And we're getting a much better return on investment since the inception of Bitcoin here. So if we go from its inception to today, we can see a much better increase in return on investment. This is over 170,000% as an ROI for the return on investment of a Bitcoin investment since its inception back in 2008, 2009, versus a 9% return on investment for gold over the same period of time. So once again, zooming out and thinking about the macro situation, where do we want to be putting our money going forward? Where are we going to get the best return on investment? And how does gold really compare to Bitcoin as a store of value and as a means of preserving wealth? I think that some of the evidence we've looked at here today, particularly with regard to the return on investment of both these assets versus US monetary supply, is pretty convincing that the price of Bitcoin is giving us a much better ROI over that period of time. And I think that a return on investment of 170,000% versus 9% over the same period is, if nothing else, should pique your interest to do some more research on Bitcoin, to understand the macroeconomic situation when it comes to Austrian economics versus Keynesian economics and all of the underlying factors there that play into the Bitcoin network and the value of Bitcoin, and how it does create an extremely hard asset and serves as an extremely robust store of wealth. So as always, if you enjoy these videos, please give us a thumbs up on the video. Please drop a like below. Make sure you're subscribed if you are not already. And tell us in the comments, what are your thoughts about Bitcoin versus gold and the future of these assets and how they compare to one another as a way to store and continue to build wealth. So as always, thank you for watching, and we'll see you in the next one.